Joining me now is Neil Herbert, the Executive Chairman of Atlantic Lithium. Great to see you again.
Good to see you.
We did this about a year ago.
We did.
We were downstairs.
Yeah.
Now we're upstairs. And there's lots to talk about, lots of news flow at the company. You came out with a definitive feasibility study, looked very robust based on the numbers, and this is your flagship Ewoyaa Project in Ghana. It's low cost, so can you remind us about it and some of the highlights of the DFS?
Sure. So the DFS itself came up with some very good numbers, and I think the best way to describe this, in particularly with the current pricing in the lithium market, works very well. It's a low capex, low opex project. So you're looking at capex currently for $185 million. So this came out last year, so relatively recent. And we can see what plays into that is, one, it's a very simple geological ore body in terms of mining. It also, in terms of the processing options, we can look at straight gravity circuit rather than looking at flotation, which obviously is a more expensive option. So that again makes for simplicity. It's actually located in Ghana itself, which is a great mining jurisdiction with very good infrastructure. But we actually sit right in the south near the port, which serves us. So we're only 800 meters from a paved road and 110 kilometers from the Takoradi port, which has a mineral handling facility, so we can process through there. So this lends to the low capex and the low OPEX, so some very good numbers coming out, and obviously people are aware where the lithium price is today. But an all-in sustaining cost of around $675 is very good, with a C1 cash cost of $371 again. Very strong numbers. You'll be able to survive the bottom end of the cycle. So that's what's key to that. So obviously we did the DFS middle of last year, and then we turned our focusing to taking the project forward, the key steps that we need to complete in terms of operational readiness, key contracts being awarded, and most importantly going through the permitting cycle. So the permitting cycle at this point in time is well advanced. So we got the mining lease from the government at the end of October last year, and now we're going through all the other permitting steps, including the EPA, which is an important one, and we expect to complete those all in the third quarter of the year, which would allow us to break ground on the project at the beginning of up to the end of this year, so we can actually look at doing modular, smaller scale production by the middle of next year, and our full plant, which is steady state production of 365,000 tons per annum by the middle of 2026, which feeds in very well to the estimates of requirements of supply. And one of the things I think which is very reassuring for investors is that we're running an offtake process at this moment in time, and the level of interest is very high in securing that project from the 2026 production onwards.
Interesting. So you're getting closer and closer, and you're continuing to expand the resource drilling. You're planning an updated resource estimate sometime Q2, Q3, correct? And do you expect it to be a much bigger number?
Well, we've continually worked on the resource. So if you go back 2 years now, we started with 20 million tons at that time, which was a good number. We moved that to 30 million tons and then 35 million tons, which is what we incorporated in the DFS. Also, the conversion from resource to reserves, very smooth, not a terribly expensive exercise. We have been doing drilling recently, so we've got lots of results to come out from that, and some of those have already come out. And it's the old chestnut here is we're actually looking to sterilize areas so we can put infrastructure on them. But when you actually put the drill into the ground, we actually have had some of our best intercepts. So you actually have to move the infrastructure to cater for new discovery, if you like, on the license area. So we expect it to continue to grow. And we've only worked 5 kilometers from the original discovery and a portfolio of 500 kilometers. We have a lot of ground to cover. So we think the potential of it growing very speculatively 2-3 times over time is very possible. The key at the moment is getting to production, getting to cash flow. So we do spend money on it, but we measure how much we spend at the same time, but we'll continue adding to resource as we go.
You mentioned, Neil, talks with offtake partners. I know you can't mention any names probably, but that process is getting closer?
Yeah, so it's a 3-stage process, and we just completed the first stage, which, if you like, was the expression of interest stage, and we select a shorter list of parties. In this case, it's 5, and that's that's an interesting reflection of what's happening in the world of EVs. So you're seeing parties come forward from the Western world, be it European or North American, be it on the other side Chinese, Asian interests, and a mix of converters and traders all interested in the product. Very good response. Very pleased about how that's going, and we'll have more news on that next quarter.
All right, so I'd be remiss if I didn't ask about, because it was in the news, but you twice rejected a conditional and non-binding offer from a long-standing shareholder, Assor International. You said it was not in the best interest of shareholders. So how would you characterize the relationship now with Assor?
Yeah, I mean, and I'll be very clear on this, is that, at the end of the day, as directors, we have an obligation to consider the offer. We're our advisors and consider whether it's sufficient value for shareholders. We took the view, and in sterling terms, that was 33 pence. Just to cut, the share price was sitting around 20 pence, and although it's a big premium against the potential value of the project, we didn't feel that was enough value for the other shareholders. So Assor have been on the company and a part of shareholders since I've been involved 9 years ago. So very supportive. They've lended their expertise in terms of exploration and mining. They like the project. They love the project, really. They've always been a big fan of the Ewoyaa Project. It meets their criteria for a low capex, low opex operation. But while obviously disappointed that we didn't accept their offers, they've actually been working with us actively on the project and its development and lending their expertise, their internal teams to us. So it's been very good. And I will assure shareholders that should another offer come forward, we will always consider it in the best interests of all the shareholders.
So everything's amicable then?
As good as it can be.
Okay, very good. Now, lastly, how would you describe sentiment in the lithium market right now and tie that in with the overall investment case? Because as you said, you are pretty well a year away from production.
Yeah, it's a very good question. So if you look at what's happened with lithium, so we have to remember lithium is a very immature market. If you go back 10 years ago, the lithium market was a tiny market. So what we've seen is, because of that immaturity, it's been extraordinarily volatile. And there's a good chart out there which shows in the last 10 years, lithium in 3 years has been the best performing mineral, and in 3 years been the worst performing mineral. So the important thing of any project is you have to be able to survive the bottom end of the cycle. And in which case, you've survived the bottom end of the cycle, which with our low cost profile, we are ideally placed. I think one of the 3 projects in the development stage which could clearly be able to do that. You can then reap the rewards when the prices are high. So I think that the market will find more stability. Where we are in sentiment at the moment, I'm not going to try and predict because it's a terrible thing to do, but we seem to have reached a position of stability. And as you've seen, even today, a lot of the lithium stocks have been recovering 5, 10, 15% because sentiment is moving. We can see that supply is tightening and the balance of demand is continuing to increase. I mean, I think we're looking at increase of 25 to 30% in spodumene demand, in lithium demand this year. It's a very significant increase and continuing to grow at that pace from an ever bigger base. I think now looks very bright for the sector. A lot of the very high cost production is being lost, which I think is a good thing, and I think some of that production will probably never be brought back on again. And particularly the pedalite production is certainly coming off stream because it's not a very attractive product to the converters and the recoveries are very poor. So the market's finding balance, like all good markets. The balance of supply and demand kicks in. I think the outlook is actually looking good this year, but if you're looking to 2026 when we'll be producing, if you look at the outlook, it's very strong indeed.
Thanks for the update, sir.
Thank you.
All right, very good. Neil Herbert, Atlantic Lithium.